All council members and council staff. We do have an apology from Councillor Goldstone, who's not able to attend. And as I said, I'd like, and anybody who might be watching on YouTube, welcome. Hope you find this useful. So firstly, I'd like to acknowledge the land that we meet on tonight is the traditional lands for the Kaurna people, and that we respect their spiritual relationship with their country. We also acknowledge the Kaurna people as the custodians of the Greater Adelaide region, and that their cultural and heritage beliefs are still as important to the living Kaurna people today. So this is a workshop, and it's been convened for the purpose of discussion around the 2022-23 recurrent budget and furthering discussion around budget bids or draft budget bids. So this session is for information sharing. It's not for building positions or otherwise making decisions. There's no agenda or minutes. And a copy of the any information that might be presented tonight will be available on Council's website if considered appropriate, and we're able to put that in the public domain. So I don't think there's any requirement to go into confidence. I haven't been advised of that, so that I don't think that's relevant tonight. So, okay, so I might hand over to Paul Horwood, who will just give us a bit of an overview of our documents. We have been given some documents just for people who are watching. As elected members, we get information. A lot of that is around, as I said tonight, the recurrent budget bids, and there is an overview that is provided by finance staff. So Paul, I'll hand over to you and you can provide us with some introductory comments, and then we'll go through the papers. Thank you.
You're on mute, Paul.
All right. Thank you, Mayor Karen. Welcome, members. As I'll just briefly touch on, want to see the key points with the memo I was saying I'm not on mute.
I can hear you, Paul.
Yeah. Sorry, Mayor. I just think I'm going to get a bit of echoing from the YouTube.
Oh, are you?
Yeah.
Close your YouTube browser, mate. Just close it.
Okay. Yeah, that might be better now. Yep. Yes, thank you, Mayor. Members, just relative to the memo I circulated around on Friday, this is obviously the last of the three workshops that have been scheduled relative to the 22-23 budget. And the focus of tonight's workshop was really to introduce to you the draft recurrent budget, noting that the previous workshop, the focus was heavily on the budget bids. So we're wanting to introduce the recurrent budget to you to obviously for discussion tonight and any questions that members may have. As I've put in the first page 107 with the memo, the papers at the time of printing was predicated initially on a very small surplus of $7,000, 22-23. However, as I noted on page 1, immediately before we were going to print, we did identify a couple of omissions from the budget, and with those included, there would be a minor deficit potentially in the order of between $50,000 to $100,000. But noting this is the initial conversation in this space. Also referenced on page 1, that result is predicated at this stage on a 2.75% general rate increase, including the 0.25% for the next iconic asset, as we've previously touched on it at previous workshops. As I've noted on page 2, members, under the table with the previous year rate increases, just to provide you some context of what the percentage in rate increase translates to. We've noted on page 2 that for every 0.5% of general rate increase, that translates to a net $113,000. Just to put that in context for you. Relative to then discussing the key points with your operating revenue, starting with general rates, the draft budget is based on the 2.75% increase from existing ratepayers, but there is also, consistent with previous years, recognising we're a growth council, we do have a growth element of 2.4%, but that 2.4% will ultimately be informed by the number of new allotments created through the Lands Title Office prior to adoption. So that 2.4% isn't necessarily guaranteed at this stage, but it's the best indicative figure that we've got based on the information at the moment. But if it's not 2.4%, I would suspect it would be very close to that. I've also just made reference on the memo, Mayor, to just thought as a point of interest relative to new revenue from growth, a recent change with the legislation, which pleasingly does not impact us at all. But just so you're aware, excuse me, so you're aware that how the legislation is changed is that a council, when it wishes to consider what the growth from rates will be in terms of new revenue from to the council, that can now only be determined based on the number of new allotments and not the increase in valuations for existing properties. So, and the key change there is it was introduced to, I guess, stop those councils in instances where there might have been the example I put in the memo is, for example, if there was a council where the average valuations for existing ratepayers went up by 5%, but the increased revenue from rates required to fund the budget was only, say, 3%, then there have been certain councils historically in that scenario who did not drop the rate in the dollar to compensate. And so that meant ratepayers were invariably getting, in that scenario, getting a 5% increase rather than the 3%. So, but what we do here is that the new revenue from growth, we always only calculate it based on the increased number of new allotments. So I just wanted to bring that to your attention. We've covered on page 3 of 7 of the memo the other sort of key revenue streams, which you'd be familiar with, whether it's grant funding, excuse me, through the federal or state. And as you're aware, each council's had considerable stimulus funding over the last few financial years. We do also have ongoing basis now sizable developer contributions, mainly relating to Gawler East development area. And the remaining revenue in the budget relates to statutory charges and user charges. Statutory charges is the likes of parking expiations, dog registrations, etc. And the user charges is the fees that we set ourselves each year. Then turning to operating expenditure, obviously the key components is employee costs, contracts, materials, depreciation, and finance costs, which we'll obviously talk through tonight. And I just wanted to touch on relative to, I guess, depreciation, because it's evident in the numbers presented that I guess wanted to reinforce the point that depreciation is earmarked to go up quite considerably. and that's been planned for, but just to demonstrate that the increase of the magnitude of this is due to the fact of the quantum of assets we get from new developments, which we receive free of charge, but we have to depreciate from day one, but also the discretionary new capital that we do by way of new and upgraded assets. So those depreciation costs have been increasing considerably in recent years. Mayor, then on the bottom of page 5 and top of page 6, given the members' ongoing interest with our debt position, thought it appropriate just to reference what our debt position was as at 11th of February on Friday, which was a tad just under $20 million, noting that our earmarked estimated debt as at 30 June is estimated at 25.4 mil. So that is earmarked to increase over the next few months as some of the major capital works programs are delivered. Mayor, then we've also then got as attachments 1 to 3, 1 and 2 being a breakdown consistent with previous years of the operating revenue and operating expenditure, and then provided an indicative statement of comprehensive income for you, predicated on the small surplus of $7,000, noting that that's obviously be subject to change. And then we've also attached for further discussion as well the budget bids. And as I've noted in the memo, Mayor, there hasn't been any change at all to the dollars. What we have done, however, is provided some administration comments relative to the elected member bids in the shaded column on attachment 4. So we've endeavoured to, I guess, provide the appropriate information you needed to have an informed discussion tonight, starting on the recurrent budget, but also having that further discussion relative to the budget bids. But Mayor, very much in yours and members' hands in terms of myself and the rest of the exec team, more than happy to answer any preliminary questions that members will have regarding the recurrent budget. And we've endeavoured to, with the attachments 1 and 2, endeavoured to provide as much sort of notes as possible, but happy to answer any questions. So I'll hand it over to you, Mayor.
No worries. Thank you. So I've got, I think, Di, did you have your hand up? Where'd Di go? Oh, there she is.
My hand won't stay up. It disappears all the time. So, yeah.
I had your hand up first, and then I saw Paul, and I'm not sure about Nathan. I thought you were going to put your hand up, but no, yep. So I'll go Di, Paul, and Nathan in that order. You've got some questions for Paul Forward?
Yeah, my first question's on page 4 under operating expenses, and they're talking about the skate park, $25,000 for real sealing of the skate park. The first question, I guess, is for Sam. Is this normal for this to happen so soon after the skate park has been developed, to have that sort of expense? And secondly, for Paul, is surely that would go under depreciation?
So I think that question was for you, Sam. Delaney.
Yes. Yeah. Fraser, that's part of the operations and maintenance required for the skate park itself. So it's a 3-year program to reseal the concrete surfacing. So that's it's been done ever since the skate park's been constructed, and it contributes to the actual wearability of the surface itself.
So that's normal, is it?
It is normal, yeah, and it's an operating cost, and I suppose I can answer that for Paul, but it's an operating cost in the sense that you've got to treat it like a paint. It doesn't extend the life of the asset; it just enables it to reach its useful life.
Okay, and is it part of depreciation?
No.
No. Okay.
No,
Can't be capitalised.
Yeah.
Depreciation's only replacement, is it?
Well, through you, Mayor, just to explain that, Councillor Fraser, yes, this is essentially to, whether it's a skate park or a raft of other assets that we have to replace at the end of their sort of useful life, because it's a replacement of an existing asset. It's a depreciation essentially won't come into it, because we would be essentially sort of writing off the old asset and replacing it with the new one.
All right.
And
I get that.
the depreciation would be exactly the same.
All right, thank you.
Paul?
Yep, it's one for Paul Hall to start with. We're proposing to a 2.75% increase. 0.25 is for debt reduction. Where does that 0.25 go so it does reduce the debt and not just in the recurrent budget and lost?
Yes, through you, Mayor. Essentially what would happen is that that additional 0.25% from a treasury management perspective, we look at our cash flow holistically. So the immediate impact would be, it would be going straight off debt reduction, because it'd be additional cash flow coming in, and yeah, so it wouldn't be sort of being lost into the general revenue, so to speak, because that's the additional rate revenue would have already been accounted for as general revenue when we generate the rates. But when the actual cash comes in, we apply it immediately against debt. So I guess there's two elements to the point you raise. Is that one is that we do have to account for that additional revenue as rates revenue in the income statement, but from a cash flow perspective, it's put immediately to reduce debt. So periodically, over the next 5 years that we were suggesting, yes, the debt would come down, and that would be an automatic consequence of that.
Yeah. And how much is the 0.25% again? I'd try to work it out. Is it?
Well, through you, Mayor, for the average resident.
Oh no, in actual dollars, is it 75,000 or 100?
Well, I think on the. So I'll just get my back on. I was saying on page 2 that 0.5% is
Yes.
113. So,
yes, so
divide that by 2, and
that's right. Yeah, so it's only $75,000.
Would be just under 60,000.
Yeah, 6,000. And so now our deficit is going between 50 and 100. So we're sort of, I'm just wondering it.
No, yeah, just to clarify, Mayor, that's a 2.75%. That's what these numbers are predicated on.
Yeah.
So that 7,000 surplus is inclusive of that additional 0.25%.
Oh no, but you said that we're going to have a deficit now between 50 and 100,000.
Yes.
Yes. So I'm just making sure in my head that the extra 0.25 isn't going to be lost in trying to cover that deficit.
No.
We'll still have the deficit.
Yes.
Yes. Okay.
Yeah, and look, through you, Mayor, to be clear, these are obviously initial numbers that we're discussing, subject to change through a series of future council meetings. But that additional 60,000 is already included.
Okay, in the debt reduction.
Yes.
Okay. Okay, and I've got another question for Sam. Again, it's on the skate park and the what is it? You know, the resealing. Are we also looking at the rec centre, because you've got skates and wear and tear on that floor? I mean, I've looked at it, and to me, it looks like it's wearing out pretty quickly. Are we actually doing an assessment of the floor and when that would need to be resealed?
For you, Mayor. In terms of the skate park, so I think
No. This is the rec centre, because I mean, there's a lot of skaters that use that facility.
So in terms of the rec centre, that was placed, I think, 2 years ago. We haven't actually got it budgeted for this financial year for a recoating, and it's obviously about monitoring that. So it's not allocated in this year's budget. I suppose
No, I know it's not. But is it in a recurrent budget somewhere? Because I mean, when I look at it, it looks like it's starting to wear already, and it's only been 2 years. So
I'd have to take it on notice whether
Yep,
we've
yep,
actually
yep.
speak with Paul whether
Yep.
we've allocated money when we put the budget bit up originally.
Yeah,
So
yeah.
normally we put a recurrent budget allocation on a whatever the cycle is for the
Yeah. Because I haven't seen it on the long-term financial plan. You know, it hasn't popped up yet as a recurrent resealing. That was all.
Yeah.
And when I saw the skate park being done, I thought, oh well, I better ask that question. Yep.
No worries.
That was it. Thank you.
Nathan, I think you had some questions.
Yeah, thanks, Mayor. Just picking up on Councillor Kosh's point, the question I guess I would ask is the skate park finish performing the way that you were hoping it would when it was developed? Question one. Question two, is the rec centre finish performing the way that we expected it?
Yeah.
I think the reports that came through that we recommended on the development and everything, if I remember correctly, the seal that was recommended to go on was, this is going to get a pretty long life. I haven't been down there personally, but if I've got another councillor in the room saying, after 2 years, it's not looking too great.
Well, it's starting to wear, and I'm just wondering how quickly we expect it to wear. Yep.
Yeah. So again, are these surfaces performing the way that it was predicted to perform? I think would be something really handy to unpack, because if we get told a concrete sealer is going to last 10 years and we're having to budget to replace it and recoat it in 3 years, we need to know that and be able to factor that in. So just picking up on Paul's quote there, and I know you won't be able to answer that now, but just a point there to make. This one's probably for you, Paul, and I'm sorry, I'm probably going to really simplify it here just to dumb it down for myself. I do admire your accounting jargon, and I mean that with the utmost respect, but I just want to bring it down to a level at the moment, if I can. If we're saying that as per the docs that we got after it went to print, where we were saying we were going to get a minor surplus of $7,000, whatever it was, since that's gone to print, we've found a couple of other items, and the reality is we're going to be a minor deficit. Everything that's being categorized in the draft budget is done in a spreadsheet. We see all the cells and everything like that. I raised the point last workshop of when do the offsets come in? I'll pick an easy example. We have an expenditure to come because we're due for upgrade fleet. I assume that's against all the policies and everything like that. And I'm also assuming that we're not going to throw the old fleet just in the bin. So when is the sales of those secondhand vehicles going to offset? Again, to dumb it down, if we say it's going to cost $500,000 to buy a new fleet, we're going to sell X amount of vehicles, and we're predicting the way the secondhand market is at the moment, we're going to make $250,000. So the reality is the expense is offset, and it's not $500,000 cost, it's $250,000 once we're all said and done. Can you simplify it to me on how that is all factored in? And then also compare that with the fact that now we're saying, well, actually the deficit's between 50 and 100, if I can't see those offsets. Now, I know it's all there, but it's not clear enough for me to digest.
Yep. Through you, Mayor, more than happy to answer that one. Nathan, with the sale of vehicles, we include that revenue in each budget. And as you say, that's obviously as an immediate offset to the cost of purchasing the new vehicles. Now, I know in the budget bids, yes, we got I'm not exactly sure what the cost of the new vehicles was. You're suggesting?
I think it was about 450 something.
Yeah. Now, I know with the figures I've been given from our fleet officer, the sale of the existing items would be potentially in the order of, I think, around about $100,000. But just to be clear, that the revenue we get from those sales doesn't actually, isn't treated as revenue as such in the income statement. So it doesn't fall in what we call above the line, the 7,000 surplus, is actually treated as a sale of an asset on our cash flow statement. And yes, we do obviously need to account for that cash coming in, but in accounting terms, it's not treated as part of our recurrent revenue. It's essentially treated as capital revenue via the sale of an existing asset. So yes, we obviously still account for the 100,000 cash coming in, but that similar to the actual purchase of the new vehicles doesn't flow through our income statement, nor does the actual sale of those vehicles either. So yes, I hope that answers that for you.
So again, I guess I'm just trying to really dumb it down. We're going to report a loss of 70 grand 1 year, but we've sold some assets. So therefore we've got $100,000 to offset that loss. If I make that statement, is that correct?
Well, if you're just referencing, Nathan, in relation solely to the purchase and sale of vehicles. So if for argument's sake, yes, the initial purchase price of what we're budgeting for next year is 500,000 for the new vehicles. We're offsetting that with sale of vehicles of say 100,000. Then obviously the net cost from a cash perspective on the bottom line is 400,000.
400 grand, yeah.
Shown as a net capital expense.
Yeah.
But then as a separate exercise, and sorry to bore you with accounting lingo, but what we then have to do is when those existing assets are sold, from the accounting perspective, we have to marry up, well, what was the value of the assets sold compared to the value on the books. And you'll see in the on attachment 3, which is a statement of comprehensive income, the line immediately under the operating surplus deficit result has a line called asset disposal and fair value adjustments. And that is basically where the gain or loss on disposal of those assets is provided for. So that's an accounting entry we have to do. But so we also have to account for the cash transactions in terms of purchase and sale, but we also have to account for those assets sold being removed from our balance sheet, and we need to marry up the value of those assets sold to the value that we've got on the books.
Yeah. So I think I'm almost there, and I use the vehicles as an example. But there are many line items that would result in a favorable efficiency, whether it be solar, whether it be new digital technology to speed things up. All these things act as an offset. Otherwise, why are they being recommended to us other than the service levels that we need to meet as a council? Like, right, we understand that. It's just that when we get told there's going to be a deficit, and that deficit fluctuates as the nature of the beast, I get all that. But when we look at a spreadsheet and when we enter a cell in a certain way, wherever we enter it, the bottom line is what we need to be able to explain. And the reality is we're going to be out there explaining this the rate rise and what we're going to be trying to cover. And one is going to be repaying debt. One is going to be increased growth, all the reasons. But then also the new initiatives and then the new fleet vehicles and all that is where's our offsets and how is that modeled in, I guess, is where I want to drum down to, because another rate rise and like just keep on going is how it's feeling to me as an elected member. And I need to be able to explain that. And I'm not quite there yet.
Through me, if I can just, I guess, comment there relative to.
I just want to welcome Jim into the meeting. Thanks, Jim, for coming. Hello.
Hey, Jimmy.
Keep going, Paul.
Through you, Mayor, Nathan, just to, I guess, extrapolate that a bit more relative to what you've touched on, is that the recurrent budgets, given we're a major growth council, really has has, I see, sort of two elements to it. One is the continuing, obviously, the business as normal, service level, continuing the existing service levels, but also there's, as you're aware, there's the growth factor that we need to take on board. So yes, we've obviously indicated at the start of this workshop tonight that there's each year as a growth council, there's new rates revenue that comes in, but we're also demonstrating through the documents presented that there's new costs that come in as well. So we're trying to marry up, I guess, to a certain degree, the new revenue from rates, but that would be heavily offset by new maintenance costs, new depreciation costs. And whereas for the existing ratepayers that we're proposing that 2.5% increase plus the 0.225 for our next iconic asset, that 2.5 is really just to cover the normal increase in day-to-day costs, because those costs will go up by CPI or whatever. And I know, as Sam would testify, with a lot of the materials his team use, whether it's concrete or road materials and the like, a lot of those costs are actually going up by way more than CPI.
I can promise I can testify to that even more.
Yes. Yeah. So they're some of the issues we're faced with. And I know, obviously, each council wants to keep the rate rise to a minimum, but by the same token, you've got to be conscious of those additional costs that will apply. And I guess the longer term goal being that you want to ensure the ongoing financial sustainability of the council, which means you don't necessarily just look at one budget in isolation. You've got to think of the consequences down the track.
And yeah, and this will be my last comment. And then I think Paul Kosh wanted to speak as well, but completely agree with everything you've said there. And that's why it is so important to myself, and I'm sure others, about understanding where those offsets are, because we can't just keep on growing and growing, even though our borders haven't changed yet. Our borders haven't changed. We're growing internally. At some point in time, this company becomes efficient. Like, not saying it's not now, but we pick up efficiencies, we pick up recommendations, we pick up energy efficiencies, fleet efficiencies, all that sort of stuff. It can't just keep on going, because we're not. So yeah, I'm just really trying to unpack that, because everything that's commented on and everything that's modeled against is based on every bit of material we've gotten. And I can't clearly see the efficiencies, the offsets, the money saved in a way that I need to be able to say, all right, even after we save all this money in these areas, we're still recommending we need to up the rates the same way we have the whole way through. So that's only the point. It wasn't a question. It was more, that's what I'm saying when I talk about offsets. Yeah, the time was taken to be able to comment on our elected members' bids. Putting comments on the offsets would have been fantastic as well. Just a note there. Anyway, I've taken up enough of your time.
Thanks, Nathan. Paul Koch, you wanted to speak?
Oh, there we are. I'm unmuted now. Last night at the audit committee, we talked about the net financial liabilities ratio and the fact that at the moment, the target's between 0 and 100%. We're close to 90% at the moment. We talked about some aspirational targets. I was just wondering whether Paul Horwood could talk about those.
Yeah, thank you. Through you, Mayor. Yes, there was, I thought, very good discussion last night at the audit committee on this, and the proposal put by the administration was actually in response to comments made at the previous audit committee meeting by the independent members, and their comment previously was the target ratio that we have for our net financial liabilities of between 0 to 100%, which has traditionally been the sort of sector-wide view. They were the view it was too broad, didn't really provide sort of guidance to the council, which I sort of tend to acknowledge, because it is a very broad range. So what we were proposing and what the audit committee endorsed for council to consider was that still have that 100% maximum threshold, which I think is appropriate, but importantly, given the members' desire to reduce debt, we're flagging that, or proposing as an aspirational target, that within 3 years we get that ratio down to 75%, and then within 5 years get that down to 50%. And as I mentioned last night, members, at the audit meeting, we didn't sort of pluck those figures out of the air, so to speak. They were actually predicated on the indicative ratios we would have based on the long-term forecasts that have been presented through the workshops. So I thought the feedback last night was positive, because I think the chair also saw it as a positive for the new council coming in from November. They could see it as an aspirational target for council to get to, and those targets, as I said a moment ago, are essentially consistent with the targets we've got in our long-term plan. So I couldn't see it. Those targets weren't deliberately at odds to what we've already suggesting we may be able to achieve.
Yep, thank you.
Any other comments at this? Oh, Jim, just unmute, and would you like to say something?
Hello,
Hi, Jim.
can you hear me?
Yes.
Paul, hear me?
Yes, Paul can hear you.
Just
Yes.
while we're on this bit of subject about increases and all this kind of stuff and saving money, I've been in council now about 2 terms, and I've never really heard the term when businesses go and they've got to save money, they cut back. Is there anywhere where we can trim and still run it efficiently by cutting back? I know there's going to be a controversial staff, maybe more contract work or anything like that can be saved, because we do have a massive wage bill.
Paul?
Yeah, through you, Mayor. Jim, I think it's safe to say, certainly through my tenure here, when I started in 2009, that what we had done in the initial years is what I would call dealt with the low-hanging fruit, and that's so through various years, it was identified easy sort of savings and efficiencies that could be made, and those have been sort of documented through the journey. However, if council was to decide that you wanted to not have a increase of 2.75%, or if you, let's say, just for example, you wanted it to be 2%, for instance, or lower than that, to ensure the, I guess, financial sustainability of the council moving forward, that's where I would indicate to members, well, we need to identify savings that can be offset against that reduced revenue, because based on the forecast we've got and the key assumptions in the long-term plan, which are modelled on a 2.5% increase, your council would have to turn its mind to, well, what savings can be made. And I feel comfortable in saying, Mayor, that yes, reiterate the easy wins, easy savings we could make. We've already done that, and we strive each year to be as efficient as possible, but also recognise that being the growth council that we are, there is that increased demand for services from year to year. Now, it might be more appropriate for sort of Henry to comment from a staffing perspective in terms of that, but we do, as you're aware, factor in each year 2 additional full-time equivalent staff in the budget, and that's been deliberately done simply in recognition of the growth that we've experienced, which has been quite considerable and that growth does have immediate consequences at different junctures for the need for additional staff. But Henry, did you want to comment any?
I might.
Or
Henry, do you want to make any comment there, as Paul suggested? No comment. Okay. Now
I've got a comment.
Thank you for those comments, and Nathan. Yes, Paul.
Yep. I just want to comment. We are doing a service review at the moment, so maybe Henry would like to talk about where that's up to and the potential savings that may come from that.
Yeah, well, I can clarify that, as members know, we've had reports to council that Sam and his team are working through a workforce strategy to analyse where we're at now and what is the workforce that we need for the next 10 years, and what's the capacity for efficiencies, what's the capacity for continuing the internal service of our resources, and or a model that includes contracting and outsourcing, and what's the best mix. And the first part of that journey is going to be looking at service level reviews. So in terms of capacity for council to cut service or refine services, that's going to be an important conversation in the next couple of months, particularly relative to the depot operations. But while we're doing that, we're also looking at service level reviews for the rest of the organisation. So we're doing it concurrently for the whole of the business, but that's certainly going to be part of the conversations in the next number of months.
Thank you.
Okay, I think we'll move on. Everybody's hand up. Are there any questions on the recurrent revenue and the current expenditure attachments, which is attachment 1 and 2? Any questions on that from elected members?
Mayor, could I just make one comment, please, just in relation to attachment 2, just in case members aren't aware, but in the section relative to materials, contracts and other expenses, which starts on page 1 of 6 of attachment 2.
Yes. Which part of?
The section under
is it
materials, contracts and other expenses.
Yep, that's on page 1 of attachment 2.
Yep. What I've deliberately done, members, is consistent with previous years. We've given a breakdown by division, but I thought it was appropriate, as an example, using the CEO administration as the case in point. If you look at that subtotal line, the cells shaded in grey, you'll see initially the 4th column with the numbers, which has got a percent, is showing a 20.7% increase. Now, at initial glance, you'd think, well, hold on, why can those costs be going up by that amount? But what I've endeavoured to do is, in the italic text immediately next to that 20.7%, identifying that, for example, in 22-23, we have the cost of the periodic election, and that's about $114,000. And if you strip that out, so you're comparing apples with apples from year to year, the budget increase for that section is 0.3%. So I just want to indicate that I've endeavoured in that section from page 1 of 6 through to the top of page 6 of 6. For each of those subsections, I've endeavoured to extrapolate, separate what I call the one-off costs, whether it's in 21-22 or 22-23, such that once those one-off costs are removed, you are comparing apples with apples to get a sense of what the underlying percentage movement is for each of those sections. I just wanted to provide that clarification.
Thank you. We might keep moving. I know people have to leave. So is there anything people want to raise? Nathan, before you leave, do you want to raise anything in particular on maybe budget bids or anything in particular?
Thanks, Mayor. Probably just like an overview, if I can ask the question of staff here. So the council member bids, we've got those comments back, which I actually thank staff for. That's the beauty of putting them forward and then being able to get that feedback. I think that was very useful. The shade structure was one I'll use as an example. And as discussed last workshop, I'm not all for, I mean, I'd love to, but not all for shading all 16 playgrounds off the bat. There was a comment made on the shade structures, which is sort of adds to a constructive conversation I had with Sam Delena. That comment is right, I think, in saying that we recommend, pairing shade structures with end of life sort of playgrounds. We're not saying let's chuck shade structures over our aging ones, especially if we're going to rip them out in 5 years. I sort of get all that. Is that going to just happen as a recommendation and now we're going to see that come back to council, or is this something that I'm going to have to move as a separate motion to get this looked at? Because I really like the idea. And to be fair, it's not my idea. This is staff's idea, but to actually get it actioned, how do we make that happen is, one question. The other question would be the total of those staffing elected member bids are about 100 grand. Is that correct?
Yeah, 102, I think.
102 grand. And we've put aside 1%. We put aside 1% of the overall budget. So just to clarify, we're under that allowance, aren't we?
We're way under that allowance. That's right.
Mayor, sorry, Mayor, if I could just clarify, the attachment 4, the elected member bids, we've separated them between, on page 12 or 13, and bearing in mind, we haven't obviously changed any of the costs as presented, but on page 12 or 13, we're saying a gross cost for capital expenditure bids of 880,000, which is obviously the lion's share relates to your budget bid, Nathan, with the shade sales, which we've just talked about. But the 102,500 that the mayor's just referred to, that's just the new initiatives component of the elected member bids. So there's in total.
What we discussed last workshop was looking at those shade sales in particular, and we talked about 1 or 2, and I think it actually added up to about 160. I think that sounds about right. From my memory, Nathan, you might have a different figure in your head.
So the shade structures alone, obviously that just completely tipped the books, and it was purely because I didn't have any costs and the amount of playgrounds, everything like that. I in no way mean I want all shades, all playgrounds. So really that figure needs to change. I think Di made a really good point on can we do 2, and we discussed it, et cetera, et cetera. The general consensus was they're about 50 grand each. So therefore that would be around 100 grand. I mean, correct me if I'm wrong. But I think that's how the conversation went. And then add all the other bids to it. I think you might be right, Mayor, around the 160, 200 grand, whatever that was.
We're still under the 330, which is about 1%. You look at
exactly. And I guess my question there is, because we're so under, when do we get to the process? Because this is a new sort of style of doing things. When do we get to the process where we actually debate these items and what we're happy with doing? Because right now I feel like we're in a really good position because we're under our own budget by a fair bit, right? So, if we can debate and prove our merit, how does this now roll through. And then what happens, I think Henry explained it last budget, saying we're not allocating necessarily the 340 grand as a new pot of money. We're just pulling it from elsewhere. So therefore, if we only spend, for ease of math, 100 grand and there's $240,000 to put back in the kitty, are we going to be able to see line items that are below the line now recommend to come up? How does all that work? Does that make sense?
Paul Howard?
Yes, through you, Mayor. Yes, Nathan, that the next steps from here will be sort of critical in that process relative to we'll have a special audit committee meeting on the 1st of March, and they will provide feedback on the draft budget to council for the, I think, the 15th of March special council meeting. And because that meeting is a special council meeting, that will be when you'll actually be able to make formal decisions relative to proposed budget bids, whether they're above the line, below the line, etc. And that's when things will start to be formalised, because you'll essentially have that 15th of March meeting and then one more meeting. I'm not sure the exact date in April, but it's that April special council meeting. We'll be seeking, Mayor, the endorsement from members to release the draft budget for consultation. So you will essentially have 2 special council meetings to make those sort of decisions in terms of what's going above the line and below the line. And
I think last year, I think there were motions without notice, Nathan, on all the bids. And
yeah, we just 16, I think.
Sorry, yeah. And I think that worked reasonably well to get a bit of a decision on what's in, what's out, what's under the line. And so we've got 2 meetings to sort of look at that.
So would we all agree that our own bids are by default our motions saying we want them above the line, and we don't have to write motions now?
No, I'm happy to accept motions without notice like I did last year, based on.
Yeah, and based on all the other line items, I completely get that. But the budget bids that we've already put, we're not now having to move formal motions to say our bids now need to be above the line, because I'm assuming staff will turn around and say they're all above the line unless you tell us otherwise, because you've come in under the 340 grand. That's how I'm assuming it's going to be translated back to us.
So with, I can certainly talk to Paul Hallward, because last year we had definite motions to put them in. So Paul and Henry, this is what we did last year. What are we going to do this year?
Further to Paul's explanation, and as I mentioned at the last workshop, and we've all agreed that staff aren't going away and finding another $300,000, where we're now considering the merits from an administration point of view of the budget bids presented by the elected members. And on the whole, they're all fair and reasonable, but there was also acknowledgement that where a budget bid actually relates to an administration bid that's already in the system, that we can consolidate those. So my sense is that we will seek to rationalise the information that's been presented by way of these workshops, and then for the purposes of the report to council, present a table that would otherwise show which of the elected member budget bids, in the context of all our responsibilities in terms of asset management and so on, would then otherwise be presented for council to make decisions on.
I think from specifically your bid, Nathan, around the shade sales that took it up to 880. I think you might want to look at what you feel comfortable with getting it to the 1%.
Well, to be honest, I think we've unpacked that enough that staff have enough information that understand the intent. It's 800,000 because that's 16 times shade sale cost. We all agree that is not my intent necessarily. It was just floating what we're doing, and I think the reasonable cost that's come through and what we've discussed previously gives staff enough information to go, this is how we're interpreting what you want your budget bid to be. But what I'm trying to do is separate our own personal budget bids, elected member bids, from the 340,000 pot that we told staff we want to now have to bid from. And now we want staff to come back to us and say, oh, look, here's a double up, Councillor Shanks. We're going to absorb yours and we're going to spend it over on ours. And then we accept or don't accept, and so on and so forth.
Yeah.
And then whatever's left of the 340,000, it'd be really good to know, oh, good, because you guys have come in under, we were able to move these other initiatives above the line. Because this is a new process for this year of the 1%. That's sort of the process and would be really good to be communicated like that. I completely understand and agree with the same process we used last year of moving motions so we're clear on the items of staff bids of above and below the lines. I agree with that system, and it was a bit clunky last year, so I'd really like to be ahead of that this year. But the two are standalone because one's a different process, I believe.
Okay, thank you, Nathan. Paul Kosh, you've got your hand up.
I just want to follow on from there. For example, the tree management plan has been languishing below the line for a number of years. I'd like to see that go above the line. Would I just put in a budget bid now to soak up, not soak up, but the fact that the elected member bids, are below the 300, would I just put in a tree management plan bid as elected member and hope, and therefore it may get up? Or would I just wait now and just see whether, with that access that, it potentially might get up?
You could use that as a motion without notice at the special meeting, but you've highlighted it now, which is important, so staff can take note of a desire to move it above the line. Now we've got Brian and then we've got Di, I think. I can't see anyone else's hand up. Does that make sense?
Thank you. Yep. Could I ask a question about in the actual immunisations, the actual budget was 28,000 and it's now 93,000. Do we get compensated in any way by the state government or whatever? And I know we're going through some terrible times at the moment, but that's a fair sort of an increase from what was in the budget as the current budget to 93,000. Is there an answer to that, Paul, at this time? Don't worry, given it now.
Jack, that wants to answer that, or Paul?
What's that? Yeah. Okay.
Well, through the mayor, Brian, which page are you referring to?
Oh, well, I've got it off the audit one, page 23 of the audit one last night, but it's the same as the others, I'm pretty sure of that.
Oh, the graphs. Are you going, Nathan?
Of the graph.
See you.
See you, mate. Yeah, it's sort of, the current budget was 28,000, but the revised annual budget is 93,000.
Yeah.
Funding that we got?
Through you, Mayor, look, I might need to take that on notice, but I think the immediate thing would be there was, I know that obviously a sizable jump, but I think it might be related to grant funding that we've got, but I'll need to clarify that. But
so grant funding has been received. Yeah.
It might have something to do with the pop-up immunisation clinics.
General administration. The actual current budget was 220,000. It's now and the revised budget is 469,000. That seems to be a hell of a lot of difference.
Through you, Mayor. So, Brian, I'm assuming you're referring to the second quarter budget review that went to council last night. Sorry, went to audit last night. There's without looking at it further, I would hasten to suggest that increase is as a result of grant funding that we've been able to get. So, for example, a case in point being the Getting Gawler Greener, I think that's what it's called, Sam. We got $150,000 secured $150,000 funding since the adopted budget. So there'll be 150,000 revenue coming in, but we have to spend that 150,000. So that's an increase now in our expenditure. So a lot of those sizable increases have been as a result of grant funding that we've been able to secure, and it's just the expense of that grant funding.
Okay. The other one is Parks and Garden, probably referred what you were talking about, Paul. The actual current budget was 869,579, and the revised budget is 2.146 million.
Yeah, through you, Mayor. Again, Brian, if you're referring to the second quarter budget review, I just need to take that on notice, Mayor, because I don't have those figures in front of me.
Just a huge amount. And the last one that I've got here is to do with the Visitor Information Centre. None of us know what's going on, but we did hear at the traders meeting the other morning where CEO Henry announced that the Visitor Centre would be opened in March. And I noticed that on page 21 of the same papers I'm referring to, the current budget was 25,000 and the new revived budget is 35,280. The Visitors Information Centre had some beautiful souvenirs, a huge amount of souvenirs in there. I just sort of can't work out why the extra money is needed, because the place is immaculate at the moment, all painted and everything. Maybe David can put me up to base with that area there, but and we don't even know what's going on. Do we make commission out of paintings and things like that? I might take up art, but I just wondered why there's such a lot of difference. It'd be better to sell the existing souvenirs that we've got, which were fantastic. Why there's such an increase?
So through you, Mayor, I have to take on a notice because that relates to the Q2 review, not the budget papers we're discussing tonight, but we'll come back to you and there'll be a report to Council, I think, Paul, in February on that. So we'll have it ready for that.
Yeah, page 21 of that one.
Oh, next week. Okay.
Thank you.
Di, you've got your hand up, and then
Yes,
Paul.
I have. First of all, to one of Nathan's statements, he was talking about absorbing some of the elected members' costs into the normal budget. That's all on the bike racks that I requested. That's already a councillor, one of the, I think it was Sam, wrote in there that could be absorbed into the current budget. So that staff are looking at that sort of thing. Next thing is some of Nathan's budget bids for solar panels on car parks and things. In the community plan, we have a car park strategy, which is, but what year? That's not necessarily this coming year, is it? So those bids can be held off until we've finished the car park strategy and gone out. So do we have any idea of what year that's happening?
Who might like to respond? Henry, thank you.
I think the commentary on the documents there, Di, do relate to the car parking strategy, which is currently being prepared now. There was a report to the IAS committee a couple of meetings back on the strategy. We're preparing that strategy. That's going to come back to a future IAS. And within the context of that strategy, we are flagging the need to consider multi-deck car parking options for the future. And I think the commentary there is that let's not put shade structures up that might have solar panels on them on a site that we might earmark as a future car park. And whether or not we've gone so far in that document that you got before you to say that the multi-deck car park is seen as a logical site to put a shade on, to have solar panels to help run and cover the cost of that site. So that's an example of.
But would that happen in the next financial year, or would it be just a report, just an investigation done by council with a report coming back? So that cost may not be in the next, those costs can come out for the next financial year, but
Yes.
the next one.
Yes, that's correct. That's right.
And there was another one on also with Paul Kosh's elected, his one about the mower. The staff's comment on was that they would do a trial and a look at that. So once again, would those costs be reduced next financial year just for the trial and have a look at it. And if we were to purchase one, once again, that would come in the next year.
So just on these really big discussion, Henry, you said something, or Paul, I can't remember who it was, said something about a table coming up with comments of what can be absorbed, what that budget bit might look like given future needs, i.e. the solar panels or the mower doing a trial. So will we get that in a table of what the adjusted costs might be, and then we can assess that during the special council?
Yeah, we sort of need to know the costs on those things for this financial year, because it's this, or not the current, but the next financial year that we're talking about, we're discussing. So we need to know what those costs are to do those reports. And then the actual costs, if they go ahead, there's probably no reason why they won't, but if they go ahead, they can actually be reported in the correct financial year.
Yeah, through the chair. So the commentary that I've just referred to is actually provided in attachment 4.
Yeah, I'm looking at it now. Yeah.
In the shaded.
Yeah, I understand that. Yeah, but it doesn't adjust the figures. Adjusted cost.
No. We thought we'd provide some initial commentary to help this conversation, and then the next step forward would be then to rationalise those for the purposes of the dollars.
And reduce the amounts.
And then we'll work through and have a conversation with yourself, Karen, about how best to represent that for the purposes of the formal council report, whether we do it by way of individual motions, as we discussed earlier, or we do it in a consolidated way, which we just need to work through, given it's the first time that we've done it this way.
Yeah, I like the idea of a table that could be moved and accepted if members are happy, and then separate, if members want to bring up bids from below the line, like staff bids, like, for example, the tree strategy or another bid. I think Kelvin mentioned about his beautification. So I think there might be an opportunity to have a table after this discussion, consolidate it. We might share that table with elected members and see if there's support for that, and then that could go into maybe a report. Di?
Yes, and just another thing on Kelvin's beautification thing. We did a public consultation of the beautification of Gawler, which included Lindop Road and all that, which was amazing. But we spent a lot of money on doing that. We got the community on board about beautification of Gawler. Then Lindop Road was dropped and we brought up the 2 roundabouts. That's now being put below the line. I think it's really important that we actually do something, because otherwise, what's the point of doing this public consultation, getting the community geared up for this beautification, and then we don't do anything? So, if Kelvin's bid for the 50,000 can be there, at least we're showing that we're actually doing something. We're not just spending all this money on consultants and public consultations and then just ignoring it.
I agree. I think if we look at that table, Henry, of staff feedback and consolidation of what those costs might be, and then we can share that, and it might instigate, because whether members want to bring up.
We don't have to spend a lot of money, but we have to spend something every year. Otherwise, we're letting the community down.
Thank you, Di. Now, Paul, I think you had your hand up for some comments. No? Was there someone else? Maybe not. Thought Paul did have his hand up. Well, there you go. Okay. Any other comments at this stage? I think that's been a really good discussion. Oh, Paul. Yes, Paul Koch.
Yes, it was attachment to page 4 of 6, plant operations. It's sort of down near the bottom. There's a little red square and it's minus 21.6%. Could I just get a breakdown of that expenditure?
Plant operations?
Yes, vehicle servicing, repairs, maintenance, FTB, vehicle fuel, insurance, etc., etc. Could I just get a breakdown of that, please?
Paul, are you
through you, Mayor. Look, have to take that on notice and separately circulate that breakdown to members.
Yeah, so that's operating expenditure analysis, plant
Yes.
operations. Yeah, you know. Yeah, okay.
Yeah, it's got fringe benefit tax rolled up in there. Yep, thank you.
Reduction due to reduced internal plant hire recovery, light fleet.
Yeah, it's just give them.
Well, I will provide a breakdown of that to members, Mayor.
Okay.
Yeah.
Great. Thank you. Any other discussion, members? Anything anyone wishes to raise around any of the papers that we've got here tonight? Paul, you've got your hand
Another
up.
one, just down a bit, on page 5 of 6, the Aquatic Center. I've added up all those numbers, and it seems to be out by $153,000. So I'm just wondering what the 479 is actually. So when I add up those other figures, they don't add up to 479,000.
Through you, Mayor, if you're referring to the,
Yeah.
you're referring, Councillor Kosh, to the totals in the notes.
Yes.
Column. Yeah. Those any amounts in the notes column aren't necessarily the
Total.
Don't represent the full total.
Okay.
It's just referencing the, I guess, the
Biggie.
key things to draw to members' attention. So it wasn't the intent that that full 479,000 would be referenced by the would be totaling what's in the notes.
Oh, right. Okay. Right. So it's okay. There's another 153,000 floating around somewhere. Pardon the pun. Okay. Thank you.
For the elected members who are here, I'm just, if we formulate a table with staff feedback, i.e. what's absorbed, what is reasonable in existing elected member bids, and then we can consolidate that, and then we can, there's an opportunity to put up motions without notice to move things to above the line. You happy with that, Cody? I can see a thumbs up. Okay. Once we formulate that table, we might circulate it if we're able to, Henry, to elected members, just to get some feedback before it goes into the papers. That might be useful. Yeah, just so we feel that we're on the right track and people understand what's being asked of them. Yeah. Okay. I think if there's, Brian, did you want to say something?
Oh, I just want to say, if I could stay and not breathe at a meeting like this, like Cody and Lakeisha's, I mean, they haven't moved. I've watched them. There's no breathing. And that dog behind Paul, I'm sure it's dead. It hasn't moved. My dog's been running around the house. Anyway, sorry, I just wanted to break up everything, you know. Thank you.
Can I sort of say something, Mayor?
What was that?
I'd just like to welcome Jack back.
Yes.
Oh, welcome, Jack.
Never fear,
Welcome,
Jack. Back. He's been back for
Good to
months.
see you, mate.
Okay. All right. I think if there's no further discussion, if everyone's comfortable, I think we'll call it to a close. Thanks, everyone, for attending. Thanks for the conversation. I think we're moving in the right direction. I think we've given some really good ideas back to staff. Yeah, thank you for all your discussion. Yeah, we'll see you soon. We'll see. I think our next meeting is the council meeting next week. Is that right, Henry? Is that, yep, everyone's nodding their head.
And there's the launch of the Fringe.
Oh, yes, Friday night.
Friday night, Cafe Nova.
I know, excuse me, you are now part of the Fringe. You are now part of the Fringe.
You're going to give a speech.
All right.
Best end of town, not the middle part.
Best end of town. See ya. See ya.
Not that damn water place.
Cody, me.